talk about the commodities now. Manisha Gupta joins in with an interesting conversation with Bhavik Mota of Maersk, and Manisha spoke to him specifically about the Red Sea issues and its impact on India's export and growth outlook. Listen in.
Red Sea is it's the hot topic right now. It's not something that is optimal. What we are seeing is, we saw this disruption, which was, nobody predicted it would happen. It required for us to revamp the entire network because what it means that the strait is closed now. That means we have to take a detour via the Cape of Good Hope, which is a longer transit. On an average, if you're going to anywhere in the Western economy from India, it's an additional transit time of 10 to 14 days. And when you have that much extra time, and if you still want to manage a weekly service out of every port in India, it requires 2 additional ships to be deployed on every specific trade. So capacity is not readily available. So all of these requires investments of cost. You also require that many extra equipment to maintain the same flow of goods that you have. So it took a while to rejig, but now the network is normalized. Of course, the overall transit has gone up by around 2 weeks, but customers are now making amend to it. It's not the most ideal for them, but now at least they can predict by when the cargo will reach the destination.
Well, absolutely. There have been various reports on delayed, but the deliveries are finally happening there. But as you mentioned, there is more investment, more ships put to good use now. Does that also mean that the freight rates have gone much higher? Because we've seen those indexes actually show that.
Absolutely. I mean, we had pre-COVID levels, then we had COVID where we saw the spike in freight rates. The market had normalized, but now with all this additional investment that is required from capacity, equipment, bottleneck, congestion, and all of that also means a lot of additional cost. And to recover that cost, you need to, include the surcharge which customer has to pay. So yeah, from a customer's lens, if you see, of course, the freight rates have gone up, but from our side, it's basically the recovery of the cost because we need to do that to be able to sustain what we have in terms of the network we need to have.
So, Bhavik, when you say that the things have kind of normalized right now, would you say it's a new normal? Because we still are looking at concerns. How much of a global trade would you say has been hit or delayed because of this?
So now it's normalized. I mean, initially impact within the IMEA region, within the India, Middle East and Africa, that's where the maximum impact was. We did not have too much impact into Asia, Europe or Asia, US network because it's kind of ring fenced from the issue that we had. So initial phase, while everybody was redeploying the network, there was a good 15-20% capacity crunch that was there in the market till the new market normalized. So that's where we are. But now, broadly, the capacity is there. It's only a longer transit than what you would prefer.
And you also have a new India-Europe gateway, if I can say that, also being launched. How is that working? What does it mean for India?
Yes. So what we did in the existing network, with this additional transit time, we realized because when we continuously speak to our customer and especially customers from west of India, north of India, and the segment that we speak to is the retail lifestyle, the auto, the chemical segment, where it's transit sensitive, and the need of the customer is how can we reach the market, avoid loss of sales, and is there a way Maersk can help it? And it's been on the drawing board for a while. So finally we have launched the ME2 service, which basically now has a direct coverage into the North Europe port, basically the likes of Rotterdam, Bremerhaven and Felixstowe. So compared to the normal market, while overall transits have gone up, with this introduction, we are now 5 to 7 days faster than the normal market. So this is something, a welcome change. It underscores Maersk's commitment to the customer need to be able to reach the market very soon. And this is very, very important for the retail lifestyle segment because those are very transit sensitive cargo and all the perishables, when we move from India, the likes of grapes and fruits and vegetables. So it's a very welcome change and we are hopeful that we should be able to address the customer problems.
Does it also put Maersk above the other shipping companies, and also is there an extra cost to this?
Of course, it's an extra cost, right? Because the deployment requires additional ships. Because if you have to have the coverage extended now to the north of Europe ports, because all of this was in the West Med. Now you have an extension of the service into the North Europe port. That means you need more ships to do the entire round trip. So it definitely means additional investment in terms of the capacity that we need to deploy in this service.
But do you have an edge above the other shipping companies on this?
As of now, yes. It's more than the edge. I would say it's more the customer requirement. And the way we look at it, it's not about, am I better than the competition or whatever. It's that, am I addressing the needs of the customers? Am I, looking into the segments that matters? And are we able to provide the solutions that the customers are looking at?
Bhavik, let's talk more about India. And as you said, there are more sensitive products and perishables as well, which we are shipping. So what is it that India seems to be exporting more and more? Where do you see the trade really picking up?
Into Europe, you mean?
Yes, from India.
So from Europe, India-Europe, I think, is one of the biggest segment. 30% of India business from the total portfolio of around the world is into Europe. So it's a very, very important market. They're also the third largest trading partner for us. If you look at the key segments, we are talking about retail lifestyle, we're talking about perishables, we're talking about auto, we're talking about chemicals. Now, each of these there is a nuance into it. So if you see the market growth over the last couple of years, it's around 3 to 5%. The biggest we would expect is retail and lifestyle. Unfortunately, it's a bit subdued and sluggish. We know the reason for that.
I'd got to know that things have normalized now after a 10 to 15% sort of capacity crunch. What we'll do is take your leave on halftime report on that note, but you stay tuned because Business Lunch comes up next.